Welcome to our latest session, to our latest webinar, this time on the new product shopping line cover. I would like to introduce to you the two speakers today. We have, as you can see on the slide, pictures from us maybe 10 or 15 years ago, but still Andreas and I would like to introduce to you the new product shopping line cover. Andreas is a distinguished top expert within the Export Credit Agency of Germany and is one of the fathers of this new product. My name is Felix Brücher and I'm the head of market and commercial underwriting, and I will guide you through this webinar. My team and I are responsible both for the consultancy or the advisory services that we extend to exporters and banks of all sizes in Germany and beyond. And I am also in charge of our short-term revolving cover scheme. Today, we would like to discuss with you the possibilities that you have as an importer or as a bank in order to facilitate trade and exports from Germany. I would like furthermore to highlight that the availability of our consultancy services is available in Germany as well as abroad. We have opened with the Chambers of Commerce abroad 3 very important hubs. First of all, in East Africa with Eva Rössler in Nairobi, who is serving the East African market and is there to help East African importers and companies as well as banks to finance and facilitate trade with Germany. Furthermore, Eva Steinhaus, who is located in Dubai and is in charge of the whole Middle Eastern region as well as Pakistan, and also located at the Chamber of Commerce there, and she will be happy to assist you when it comes to questions around export financing. And last but not least, Markus Leichum, who is located in Singapore and available for companies from the whole ASEAN region in order to help them get financing from Germany. But without further ado, I would like to jump into our presentation on the question of what makes what are the current questions around ECA financing as well as the Hermes cover. Let us have a look at the triangle of export financing in order to understand better where we come from and what the beauty of our new product, the shopping line cover, actually is. So first of all, we always have to ask ourselves the question, of course, why does the federal government in Germany support its exporters through the scheme of export credit guarantees? First of all, the government aims, of course, at strengthening and supporting German companies in export markets, which are regarded as volatile or are seen as fairly risky. During times of crisis that we are seeing currently, we of course extend our cover to markets which are usually not in our scope, namely the European Union market as well as other industrialized countries. From the perspective of our exporters, it's always key to trade and manufacture securely. As most of you know, most of the German companies are fairly risk adverse, and decisions are often taken from a position of thorough risk management perspective. For you as foreign buyers, of course, it's crucial, especially during times of crisis, that German goods and services are available also on credit terms. We, as the official export credit agency of Germany, will support this scheme, and we will support German exporters and banks as well as foreign buyers during these, let's say, challenging times in crisis. The German government has supported exporters, and by doing so also importers, during this unprecedented coronavirus crisis, and has not cancelled or restricted existing cover, both in the mid and long-term financing scheme as well as revolving short-term financing schemes. In contrast, we have even extended our possibilities to cover risks to countries, as I mentioned, within the European Union, as well as industrialized countries like the US, Canada, Japan, or Australia. So therefore, it is possible to cover these risks for German exporters and banks, even on a short-term basis. Currently, there are sufficient funds available to cover supplies and services under our export credit guarantee scheme, and we have even increased this framework further. Furthermore, we have broadened our product portfolio after 2 or 3 years where we focused on the digitalization of our product portfolio, as well as on the introduction of purely digital products. We have now, in the crisis phase, introduced a couple of new products, as well as we have improved our existing product portfolio. Of course, we are an anti-cyclical instrument, meaning in times of crisis, we work with our banks and exporters in order to provide cover both in industrialized as well as industrializing countries. We will focus today, of course, on the shopping line cover, but I would like to highlight one further product that we have launched, which is the so-called 720-day bullet financing. It means that you have the possibility, after a down payment of 5%, to get financing of in a duration of 720 days without having any further down payments to make after this initial 5%. That is something which is fairly novel to the market, and we have the clear hope and expectation that we will be able to help both exporters as well as importers to overcome the times of crisis and get financing as well as superior products from Germany. After these introductory words, I will hand over to my colleague Andreas Gehring, who will introduce to you the shopping line cover. As Janine said, you can always ask questions in your chat function on the right-hand side, and we will sort of cluster the questions asked and then try to answer them at the end of this session. As I said in the beginning, help, advisory, consulting, and support is only one call away. You can either call my team and me, and I will, of course, also facilitate the contact to our financing experts, which are located in the hubs in Nairobi, Dubai, and Singapore. Without further ado, I would like to turn the mic to Andreas in Hamburg. Andreas, please introduce us to the beauty of our new product, the shopping line cover. Thank you very much.
Thanks a lot, Felix. Good morning, ladies and gentlemen. It's a pleasure for me to give you some insights into our new product shopping line cover, which will be, especially in those challenging days, from our point of view, a very helpful instrument to get into the new markets and to continue with your existing contacts to your importers throughout the world. We also will have some technical insights which will help you to get the idea what are the real practical advantages of this new product. First of all, I would like to introduce the general idea of shopping line cover. Well, in Germany, we have a very broad export base, especially from a lot of SME customers, and shopping line cover will help those exporters to enlarge their export possibilities throughout the world. And also it is very helpful to make use of Germany's AAA rating when it comes to funding of your project. Especially for exporters, the basic ideas of the business does not really change, because the exporter, they deliver their goods to the foreign importer. The foreign importer will pay directly to the exporter, so then the transaction really is settled for the exporter, and then we can add the funding by such a shopping line cover, making use of the credit line provided by a European bank. So with such a shopping line cover, it's possible to combine various deliveries and services from various exporters, which results to the fact that you have low and reduced administrative burden using this one single credit line. What will be the practical result? The foreign customer can pool those supplies in certain tranches and then draw them down from the federal government via the financing bank. So a very practical and a very smart procedure. What are the technical ideas behind this product? A lot of banks already know our well-established product buyer credit cover, and they are well used to the details of this product. Technically, for shopping line cover, we modified this buyer credit cover by special terms and conditions. So the basic ideas remained unchanged, but we added some more value, some more technical features, which will make it for you very easy and convenient to cover export from Germany. And such a simplified handling will, for example, with a uniform repayment profile, will make it very easy in comparison to single transaction cover, for example, by a buyer credit cover. And what is the idea behind? Our idea is to enable you to get better access to the procurement programs of strong foreign buyers those importers normally have access to various financing tools, but we think especially for German exporters, it might be very helpful to offer this very strong product shopping line cover to get access to those procurement programs. But we had made a lot of interviews when developing this product in advance, and we know that's very important to show at the very beginning when the procurement programs for the next years will be planned, that there is a strong delivery basis from Germany with convincing financial solutions. And we can offer this at the very beginning, and then those importers will go into the details and get in touch with the German exporters and banks to discuss and to negotiate and further details. But at the very beginning, you have a strong indication from the German government, which will help you to get in further negotiations. What are the details of the new products? First of all, we will concentrate on foreign buyers with an excellent risk category with a rating in our internal rating category, CC1 and also sovereign categories are possible. This shows that you have very strong foreign customers, you have strong importers, and they can make use of this new product shopping line cover. From the technical side, we made it very easy. It's only necessary to have one credit documentation. For example, you only have to deliver legal opinions only once, and you can make use of this credit documentation for all your deliveries, making use of this credit line. And on the other side, also the federal government will issue only one guarantee document and one premium invoice. So you don't have any addendums which might be more difficult from the technical procedure. The procedure itself is a reimbursement procedure. So exporters already have delivered the goods to the importer. The importer has paid out the money to the exporter, and then the financing, for example, for 8 years will be added on, but only in relation between the financing bank and the importer. The exporter itself can concentrate on his business. The financing during those 8 years won't be very difficult for him because he already has the money in Germany. As we only will issue one premium invoice, the premium is charged upfront on the loan amount to be covered, so the premium will be calculated on the credit line. We have also learned that sometimes the question is it always possible to have deliveries from Germany, or it is necessary to include also deliveries from other countries. And we know there is a strong trend to internationalization, and therefore we extended our foreign content rules within a certain credit tranche. The foreign content will be only have a maximum of 49%, but it is based on the total contract value within such a tranche. So each single delivery can have a higher percentage regarding foreign content. For example, if you have 70% from Italy, and then for the next machinery you only have 30%, then in a sum it will be okay for this new product. And this gives to you a very strong flexibility, because you as an importer have the right to choose what will be your package for the credit tranche. And in case you need a certain optimization, then you can put certain deliveries just in the next credit tranche. So this is a very strong advantage. From the technical side, as a currency, we have euro and US dollar. That makes it practical because we have learned in the discussion before that sometimes it's technically very difficult if you had at the same time, let me say, 5 or 10 different currencies. And also from the operational point of view, it is very helpful to concentrate only on 2 currencies. This means, of course, that the contract with the exporters can be in a different currency, but this is a currency for the credit line. For the German government, it is very important to comply with all international environmental rules. So the environmental assessment will be according to those standard rules. But we also have here very strong advantage that some elements, especially on the foreign importer, can be assessed in advance. So you only have to concentrate on the machinery itself when it comes to the delivery. Let me give you a very practical example how such a product can be handled. At the very beginning, it's possible to issue a letter of interest for the importer itself. So it's also a very new element that the importer can get in touch with the German government, with Euler Hermes, to get this information, because sometimes it's not already clear which bank shall be mandated, and therefore it's possible to get this letter of interest directly from the German government. But of course, the bank also can ask for such a letter of interest. And in this letter of interest, the German government already will give an indication on the amount which might be possible for the credit line. So this makes it very easy to go on with further negotiation, because you have a strong signal from the German government that, let me say, an amount of 300 million euro will be available. In case you have structurized your product and your transaction more deeply, then you can ask for offer of cover or the final commitment by the German government, and you can ask for the decision from the interministerial committee from the German government, where you will receive the final commitment as already known from buyer credit cover. So the procedure is not changed. Then it's possible that various exporters from Germany ship their goods to the importer, and the importer can pay directly to the exporters. So the payment itself is a very strong signal that the importer has received the goods and that they're good in good order and condition, and otherwise he won't pay directly, but asked for more technical advice, and then only will start with the payment. And then, after the exporters have already received their money, the drawdown of the credit tranches is possible. There are no limitations regarding the order volume, the number of drawdown possibilities. This will be negotiated between the bank and the importer, and the German government will accept and will have a look at those details discussed between those negotiating partners. And so you have a very strong flexibility. After this drawdown has been done, we will check all the details. Especially, we will have a look at the machinery which are included in a specific list, and then we will say, okay, the specific goods can be included into the cover, and then you will receive, especially as a bank, a certain confirmation, but it's not a formal documentation like a addendum to the guarantee document. It's just an information that specific deliveries, goods, services had been successfully included into this very specific credit tranche. So this is the basic idea, the basic procedure. Let us go some more into the details of those drawdown lists. I've prepared a certain draft of such a list, so which you will have certain ideas, amount, date of delivery, and certain goods. And those drawdown lists can be filled in by the importers. The importer will send it to the bank in Germany or Europe, and then this bank will go to Euler Hermes, and then we will check it, and we will after that include the goods into the credit line. So in case you have a guarantee document issued for 300 million euro, you can make use of several different tranches within this whole credit line. Normally, we know it from the buyer credit cover that all exporters have to fill in a certain letter of undertaking under anti-bribery declaration and so on. This is necessary to have a certain link between the cover, which will be given toward the bank, and toward the exporter. But especially for SME customers, we sometimes learned that they're not so in the details with Hermes cover, and that they are more or less interested in shipping the goods, and they would have the wish not to have some more administrative burden. Therefore, for those very small amounts, it's possible that they don't have to fill in those letters, because this will be done by the importers. This will be explained on the next slide, but this is also a very strong argument to include SME business. And such a drawdown list will be presented for all the goods of one tranche, and then a decision of inclusion will be done for each individual transaction, and it will be checked by our side if everything is fine and in line with the guarantee document. Let me give you a very practical example. So first of all, the German government will say via a letter of interest that a certain importer, let me say in Brazil, is worth 300 million, and we are willing to grant a shopping line cover, and we have a certain indication that this will be possible. Then you will have cover for shopping line, and you will have received the full cover for 300 million. And then you can be very flexible. So the importer will decide which will be the amount, for example, of the first drawdown, and what will be the amount of the second or third drawdown. And also the number of drawdown can be negotiated between bank and importer. We will have the possibility, and this is also a very strong advantage, that in the first drawdown, you already can include business which comes from the past. We call it reach back option. So in case you already have goods delivered and repaid in advance before having this shopping line cover, it's also possible to include this into the whole shopping line cover. This specifically will be very helpful because then you can come to reasonable amounts, because you also have certain costs, you have certain fixed costs which will arise, And therefore, it might be very helpful to have, for example, in this example, additional 50 million euro. But it's very important to know that for each reach back euro, it's necessary to have at the same time also €1 for new business. So in case you have new business of 50 million euro from certain exporters, you also can include at the same time reach back business of 50 million euro at a maximum. This won't be possible with the further drawdowns, but as it's business from the past, you know that you also already have concluded and shipped those transactions, and therefore we think it's very easy to include this into the first drawdown. Then it might be possible that at the end of the availability period, it's not really 300 million you have used, but for example, only 270 million. That's no real problem because that's real life. You have especially the flexibility to include further business for this 30 million euro, which is, for example, not planned, or because there's a technical advantages, and therefore, as an importer, you would like to include this, but sometimes it's not possible. And then we will refund the premium for this unused portion of the shopping line cover. And I think this is a very, very helpful element because then you have the possibility to have the premium only for the transaction you really made use of. Sometimes it might be possible, yes, you have a shopping line cover for 300 million euro, and you make use of it only for 50 or 100 million euro. So therefore, you will block in a certain way cover possibilities from for other transactions, and in those specific cases, a non-utilization fee of 10% may be charged, but this should be the exception because normally you have a clear idea what will be the maximum amount necessary for this transaction. What will be the period of time, the risk horizon, which is possible for those transactions? Also here we follow the international rules that this will mean we follow the maximum risk horizon given from the international side. So in case you have an example of 10 years repayment period risk horizon, this is acceptable way. Sometimes you have exceptions because you have some specific machinery from the environmental business or so on. Then you have longer risk horizon following the international rules. We have to go a little bit deeper into the details. In case you have a maximum of 10 years, then you have the possibility to, let me say, have an availability period of 2 years. This availability period enables you to have the specific drawdown. And at any time you would like to do in this availability period, you can make the drawdowns, and then the repayment period will start for the whole credit tranche. As the maximum from the international side in this example is 10 years, you have an availability period of 2 years, then they remain 8 years for the risk horizon for the pure repayment period. So you have the flexibility what will be your preferred risk horizon. In case you need 9 years repayment period, then you only have left 1 year for the availability period. So it's a very strong argument also to give this flexibility. As I already mentioned, we have specific rules for small ticket transaction, which have certain advantages. So you have contract values of 5 million euros. Then we will don't go such in the details. So normally you have to go into the details with German content, but with the small business small ticket transaction, we say we just have a look whether the company itself, the German exporter, has production facilities in Germany for the specific line, and then it will be okay. It's not necessary to have additional information. And we also said, especially for the small transactions, the technical declaration or the anti-bribery declaration or letter of undertaking should not be filled in by the exporter. This could be a task of the importer because there is a certain contact with the importer. So some declarations that they had no, that's a bribery-free transaction will in those cases be given by the importers. As it should be a certain exception, this only should be used 4 times for each exporter and credit line, but we know from our discussion that this is near to the practical needs, so we are confident that this will be sufficient for your transactions. Let me have some more additional information on the reach back option. So it's really possible to include transaction from the past, and this will really help you to come to reasonable amounts. As I already mentioned, it's necessary to have €1 new business, and therefore it's possible to include €1 of reach back period, and it's necessary to draw this at the same time with the first drawdown. What could be business from the past? This means from our definition that the export contract must not date back more than 2 years, and the delivery must not have been taken place more than 1 year prior to final commitment. And also for those transactions, an importer declaration is required, because as the business is already completed, especially from the perspective of the exporter, it might be difficult to understand from the exporter's point of view why 1 year later he will be asked to fill in some forms. And the importer really profits from this solution, and therefore it's easy for him to fill in this importer declaration. All those technical forms will be given to you on our internet site, agraportal.de, in a very short period of time, so you can have a look in all the details. Let me summarize the main advantages of shopping line cover on new product to give you strong support for your business to your key markets. First of all, it's possible to have a letter of interest, including an indication on the amount at a very early stage. So this will help you to start successfully with your negotiation. Foreign supplies are possible up to 49%, but not only on a single delivery basis, but on the whole credit tranche. And you have the flexibility to build the credit tranche, so you really can profit from it. We have a lot specific rules for small ticket transactions up to 5 million euro, which will help you to make it very easy to include SME business. We have a very strong argument for shopping line cover because you can also include business from the past. We call it reach back. And there are a lot of administrative release, which make it really easy for you to handle the business. The application can be done by the bank by our internet portal, My AGA. We have certain icons. You click on those items and will be guided by specific question and what are the information we require from your side. And also for further shopping lines with the same foreign customer, you can make use of it just by copying the main details. And then if you like to have further business with the same foreign customer, to just fill in the new information, but the rest can be easily used also for the new shopping line cover. As already mentioned by my colleague Felix, we will be always at your side to give you further information on shopping line cover, but also on all the measures of the German government implemented at the 1st of July to successfully fight against COVID-19. We have provided, especially for shopping line cover, a specific brochure giving to you some more insights, and we will continuously inform you by certain events, mostly in those days by webinars. But I think most important is to have the direct contact where you can ask all the questions you have, the question on the shopping line cover, on the handling and the requirements of the German government, not only in Hamburg, not only throughout Germany, but also abroad with our colleagues from our hubs throughout the world. But now it will be possible, it will be time to go directly into your questions you have now. I have seen, especially in the chat function, you have placed also a lot of questions, and we are happy to answer those questions, but will of course be at your side after the webinar. And of course, we will provide you with all the slides some days after the webinars, so you have all the information with you and can study it furthermore and ask very specific questions. Thank you very much. And now I will hand over to my colleague Felix. Thanks a lot.
Thank you very much, Andreas, for these insights. That was very helpful. Thank you indeed. So let's turn to the questions that you already asked. We have quite a substantial number of questions. I will answer the first couple of questions in order to also give Andreas the opportunity to have a sip of water, some coffee, or other healthy products. Well, you already answered the question, Andreas. We will provide, of course, the slides to the participants of this of today's webinar in order to help you understand the product. And our clear hope is, of course, that we then start into a individual discussion on possibilities where we can support you, whether you're a bank or an importer or an exporter. We will be always at your side and extending our help to you. The first question that we got here is more a structural question. We got this from an international group with a worldwide footprint in infrastructure projects. But having said that this group has a worldwide footprint, it also has production facilities within Germany. And the question was whether this company, this group, would be qualified for the shopping line. We can clearly say yes and yes. This company could use the shopping line in two ways. First of all, of course, as a supplier from the perspective of the German company which this group has in its portfolio. So the German entity would be able to use the shopping line to open up and extend financing to customers all around the world. So that would be the exporter-centered approach. The second approach, of course, could be one where the company is using the shopping line in order to finance goods and services from Germany. So there, the company would, of course, need to be non-German, so that we have the export transaction, of course, and so you could use this shopping line as an importer, of course. So for this company, which has a footprint, a worldwide footprint, we could see the company either as an importer or as an exporter. Andreas, would you like to say something in regards to the creditworthiness of the buyers that we are looking at the moment?
Well, we are concentrating, especially at the beginning when launching the product, of very strong international groups, and because we have a certain flexibility. So those importers will have the flexibility with regard the machinery, with regard to the period of time when they can make the drawings. And this flexibility at the beginning will be given first of all to very strong international importers. Of course, we have our traditional buyer credit cover in case after this assessment, for some reason it might not be possible, then our traditional products, buyer credit cover and so on, leasing cover, will be possible for those importers. So support by German government will be given. When having introduced this shopping line cover product, it will be at the beginning for certain customers, and those customers, importers with a strong international rating.
All right. So that has to be said clearly, as Andreas did. We of course enter a fairly competitive market with this product. We are looking at international groups and customers, which of course have other refinancing tools available. But we are fairly confident that we will add an interesting product to the equation here, and we are fairly hopeful that we can support German exporters and banks, and by doing so, placing German machinery all around the world. There are further questions. Andreas, can banks also act as borrowers under this scheme?
Well, first of all, we will concentrate on those very strong importers, because also, for example, the importer's declaration will be given by the importer itself. In case you add a fourth party, let me say, a bank in an emerging market, then you will add certain complexity. We will have a look at what will be the demands of the markets. We will monitor this very closely. And for us, it's very important to learn more on the needs of the market. But at the beginning, we will concentrate on those first-class importers. I cannot exclude that at a later stage, when we have gained more experience with this new product, then we also may give a certain role to foreign banks. Maybe they can add some guarantees or so on. So this will be continuously monitored, and the product then will be reviewed, let me say, after a certain time. But we will start first of all with the importer itself.
All right, thank you very much. Of course, the OECD rules continue to be applied here. So when it comes to local content, but also when it comes to down payment requirements. So we will continue also under the shopping line cover to require at least a 15% down payment. Furthermore, of course, that's not related to the question of the OECD consensus. It is possible to have the premium financed under this cover. I got another question whether we would be able to name certain importers which have been covered under this shopping line scheme already. Well, the short answer would be no, we can't name them. But currently, we of course in a rollout phase, and we would be happy to discuss with importers their refinancing needs when it comes to buying German goods and services. But we of course are not able to name any of those publicly. Let me have a look what else we got as questions here. One, Andreas, is regarding the different tranches. The question here was what would happen if a tranche at the end of the collected amount turned out to be with a higher foreign content than the 49% due to changes in the sourcing structure?
Well, as I already mentioned, you have the full flexibility. You will you are not forced to include certain deliveries. You will sum up all the foreign content percentages within one credit tranche, and then you see, okay, it will be 30%, 40%, or a maximum of 49%. That will be okay. In case you have a certain transaction which will be necessary or which has a higher foreign content, then you can open a new credit tranche and then include this into the next credit tranche. And so you have the flexibility as an importer to structuralize this, and we just will follow your proposals. And we also will concentrate on the applications for inclusion in case for certain reasons the government cannot include certain goods. This will not be part of this summing up regarding foreign content. So it's a very flexible tool which gives you the possibility to decide in which credit tranche it should be included.
All right, thank you very much, Andreas. We have another question from the Southern Hemisphere. Good morning to Brazil there. And the question was whether the understanding is right that the importer has to pay the exporter in advance, and that we work in the framework of the shopping line only on reimbursement. That is correct. We structured the shopping line on a reimbursement only framework. Okay, let me have a quick look. I don't know, Andreas, did you spot any questions that I didn't ask you or answered myself?
One question regarding interest rate, whether it might be possible to have a fixed or floating rate. So this follows the traditional rules of buyer credit cover. In case it might be possible to include a fixed or floating rate in a normal buyer credit cover, then it also might be possible to include this into the shopping line cover. So there is a full flexibility. Provide us with the information you have when presenting the application, and then it will be the normal procedure for buyer credit cover.
Indeed. We have one more question, whether the foreign bank, in this case Turkish banks, can act as borrowers and then lend under this facility to their domestic clients. This, of course, was answered earlier, but I would like to emphasize also the possibility of using so-called bank-to-bank structures, which of course have a long tradition within the ECA world, and especially in Eastern Europe, where we structured many of these facilities where foreign banks, of course, agree upon a credit line with German banking institutions, and then are able to provide financing to local companies. This is something which of course is also possible in Turkey, and therefore I would of course ask the banker asking this question to get in touch with us in order to see what we can do to help. All right, I think we try to keep in the time limit. First of all, I would like to, of course, ask Andreas, do you have any further comments at this point?
Well, I thank all the participants joining us in this presentation. We are sure that we have given to you some basic information, but we'll be happy to get in touch with you for further discussions in a general way, or with very specific project which will be structured together with our side. Thanks a lot for your participation.
Thank you very much, Andreas. This leaves me to close this webinar today. I would like to take the chance again to emphasize that we are more than willing. We are happy to assist you. Just give us a call, send us an email after this webinar, and we will be there to support you. We will provide you with the slides, of course, and I would like to also thank our colleagues in the background making this webinar possible again. We will be back in 2 weeks' time. We will, of course, have German as well as English-based webinars throughout the year. Now I would like to say goodbye to you all. Stay safe during these fairly difficult times, and as always, stay safe, stay distant, but give us a call whenever we can help you. Thank you very much, and have a good day. Bye-bye.